Will the Fed shock stocks? Should we be mad about the Newix fiasco and some super freebies to get mad about before 30 June? I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
Okay, I'm in Port Douglas, Paul. I'm really suffering, and you're in Sydney and really enjoying the cold weather. But some really big stories here. The Fed, could it shock the stock market?
Yeah, Pete, look, I won't get to your address and or your location. I'll let that just go through to the readers or the viewers. They'll make their own call about that. But yeah, tonight, obviously, that big night for the Fed, the second day of the Federal Reserve Board meeting, and an expectation that we may get some news from the Fed, either in terms of perhaps a tapering of the bond buying program, or alternatively, maybe the dot plot might suggest interest rates starting to go up just a little bit quicker than they've said before. So two things to look out for there. And I guess the market's a bit on edge because if we all had the discussion around inflation, the market, I think, has bought the Fed line so far that this is just transitory. But maybe if they start to see the governors getting a little more concerned, then that just could be a little bit of a temper for markets, Peter. It's a bit hard to call just what the market will do one way or the other. It's sort of damned if you don't, damned if you do. And then is it a good or bad thing if the Fed is actually getting just a little bit concerned about some of the activity out there?
Yeah, I guess the Fed also is aware of the stock market effect as well. And the last thing they really want is a mini crash of any kind. So how they handle it's going to be very interesting and could make us very mad about money tomorrow morning. Let's go to the next one, Paul. Should we be mad about Newix, Paul?
Well, I think we should be, Peter. I mean, I'm a shareholder. I think you're a shareholder. We're both at higher levels. Lots of people we know are also shareholders. We all got in a little bit too soon. Now we see that both the CFO and the CEO are going. I guess in the case of the former, he's been fired. It was a mutual termination, whatever that means. And now the CEO is also walking out the door. So I guess it's positive in the sense, Peter, that the board is finally realizing that it can't go forward with the current team. It's really got to rebuild the company. But for shareholders, it's going to be a long wait. This company has so badly damaged its credibility that we're in for a tough haul as shareholders. But meanwhile, Pete, the rest of the tech stocks, they're flying again.
Yeah, and my argument for that, Paul, is that the bond market that spooked everybody in February with rising yields on the 10-year bond is now coming down, which I think is a very good thing for tech stocks. And that's why those AAA stocks I mentioned a few weeks ago, Altium, even A2 Milk's going up. It's not a tech stock, but also Appen. They're all heading in the right direction.
Well, I noticed that Xero's up yesterday to $137. We put a buy out at $112. That's a nice almost 20% gain in about 5 or 6 weeks on that. Some of the others have done almost as well. So look, that's all good news. And I guess that goes back to the Fed meeting, how important that is, because if the bond market takes what the Fed says as negative and interest rates go up, so does the end of the tech rally. So really important how the Fed just nuances that really carefully tomorrow. They're pretty good, as you said, Peter. They don't want markets getting spooked, right?
Yeah, without a doubt. Now, the last one, Paul, some super freebies before the end of the financial year.
Well, of course, we are 30th of June, Peter. We're only, I think, 14 sleeps away. Who's counting? But some of us do in this business. But, look, there are a lot of things to do in superannuation, of course. Get your contributions in. The main thing is you can get up to $25,000 limit. That's a combination of your the employer's 9.5% plus salary sacrifice plus an amount you claim as a tax deduction. You get that up to $25,000, you can claim the tax deduction this year. Two other things to look out for is what we call the super co-contribution. The government will put in up to $500 if you make a personal contribution of $1,000. Now, income's got to be under $40,000 to get that. But where I think that comes in really handy, Peter, if for very generous grandparents and parents who might have perhaps teenage children or young adults who are working, a good way to boost their super is put some money on their behalf into the super fund and get the government to cough up an extra $500. You can read all about that on the Switzer report on our website. The other thing, of course, is the spouse offset contribution to get a tax rebate for making a $3,000 contribution to your spouse's super. Her or his income's got to be under $40,000 to qualify, but why not get $540 back from the tax office if you can? So a couple of things to do. Got to do them before the 30th of June. So some super freebies, as we say.
Yeah, and all you got to do is go to the Switzer Daily or switzer.com.au. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
I'm mad about money. And it's really hard to coordinate it when we're doing it from different locations.